If you're sick of soaring home insurance bills and getting the runaround when you have a claim, you won't like what you're about to see.
What did I pay for?
It's the story of how we got into this mess.
I can't afford to get a house because I can't afford the insurance on it.
How politicians did not have all the facts.
We've been trying to solve a problem without the actual data to support the information.
And how homeowners across Florida get burned.
A paper insurance policy does not guarantee that your losses will be covered.
I'm Craig Patrick, and we'll start by challenging conventional wisdom in state government as we investigate causes and potential solutions to Florida's home insurance crisis. As some companies failed and our home insurance bills skyrocketed, the insurance lobby blamed it on lawsuits, and state leaders accepted that and ran with it.
Somehow you have like one shingle off the roof and then some lawyer comes in and then they end up doing this. There's a big lawsuit.
They made it harder and riskier to sue insurance companies. For example, homeowners can no longer recoup their legal fees when they prevail, which can in fact reduce frivolous lawsuits, but it can also burn homeowners with legitimate disputes. Because if you have a home with, say, $20,000 in storm damage that your insurance will not pay, it could cost you more than $20,000 in legal fees to dispute it. So you could ultimately prevail in court and then lose money in the process, and the insurance companies know it.
Where do I even start?
Wayne Thompson is disabled with nerve damage from his spine through his legs.
It radiates from my hip down to my knee.
And he's lived for months in a moldy mess. Hurricane Milton peeled off his roof and flooded his home. Look at the streams pouring in from what's left of his ceiling.
It was like a horror movie.
As he waited for insurance money.
There it goes again. There goes the rest of it.
And hit one snag after another.
So it's like a maze.
Insurance told him his roof could be repaired. The roofers he found told him it could not. How many roofers told you that?
Probably about 8.
What did your insurance company do next?
Nothing. They kind of just ignored us.
In March, insurance did send a payment for repairs, but Wayne says it was far below the estimates he could find to do the repairs. Plus, Wayne said the delays caused additional damage that has exceeded his policy limits.
I sold clothes, shoes, probably about 16 grand I was able to come up with on my own.
And most of that covered a temporary repair of his roof.
The roof patch was about $9,000.
That failed inspection.
That failed inspection, yes.
And he knows the challenge that now comes with taking them to court.
Built for the insurance company, not us, not me.
So when state lawmakers made it harder to sue insurance companies to try to bring down our premiums, how did they know that bad faith lawsuits were driving up our premiums to begin with? Well, here's what some said they had to go on, or rather did not have to go on when they passed these reforms.
But there is no data as of today that speaks to the number or the amount paid out in bad faith lawsuits last year or over the last 10 years. To be correct.
Thank you, Madam Chair. Thank you, Senator President. I don't want to say there's no data because I don't know.
And with the lack of that data, they stressed and repeated one particular statistic.
We have about 8% of the insurance claims for homeowners nationwide. The state represents 78% of all the litigation.
For perspective, that stat originated with former State Insurance Commissioner David Altmaier and an insurance group that he led. And it's based in part on information that we can't see because it's confidential, and it's based on data that excluded some markets. And former insurance regulator, economist, and consumer watchdog Bernie Birnbaum says that it also lacks context.
There certainly was more litigation among certain companies in Florida than you'd find in other states, but over half of the companies had very little or no litigation.
What does that tell you?
It says that it's not an industry-wide problem.
Well, see, Florida has a very different mix of insurance companies writing policies than other states do. So it might have just had a comparatively small number of companies getting disproportionately sued for wrongly denying claims. And here's why that may not have inflated our premiums as lawmakers assumed.
the cost of the so-called frivolous, and I put that in quotes, litigation is a few pennies of the premium dollar, nothing of the magnitude to drive the premium increases that we've seen.
After the reforms, a national analysis from AM Best did not list litigation as a factor in insurance company failures. And research from the Florida CFO's office did not list litigation as a factor in insurance company failures. And insolvency reports from the CFO's site don't mention litigation either. But some of them do point to something else: insurance company mismanagement.
And I'm wondering if maybe more effective oversight, I'm actually confident that more effective oversight would have helped to avoid this disaster.
We'll dig into that in a moment. But first, we want to show you what more the legislature and governor did to help insurance companies. They also offered them an additional $2 billion in state-backed reinsurance. That's state money to subsidize the private market.
You have to consider things that I, as a conservative, would not wish to do.
Now, before this passed, some lawmakers doubted that subsidies for the insurance companies and making it harder for consumers to sue them would help consumers.
It's corporate welfare. It's only helping the big businesses, and my constituents are not going to feel any relief as a result of it.
1 year later, in 2023, President Trump claimed that Governor DeSantis delivered the biggest insurance bailout in history and crushed Florida homeowners whose houses were destroyed. Trump claimed Florida's insurance commissioner does nothing while Florida's lives were ruined. Now, for context, Trump and DeSantis were running against each other at the time, and state lawmakers said that it would take more time for their changes to deliver results.
A year or year and a half, I would think, would be a reasonable time frame.
But that was what they said in the spring of 2022.
These changes will take at least 18 months before they really have an impact on the consumer.
So to be clear, not till October of 2023 conservatively would any of our constituents see an adjustment in rates.
Well, premiums continued to rise through 2023. For example, in Pinellas County, Dave Lesko's home insurance rose more than 73%, going from $5,500 to $7,500. And that's after he had renovated and bolstered it with stronger windows. And then guess what happened the next year when he got his next bill in the summer of 2024?
$17,000.
You think they added a digit in there by mistake?
I thought so at first, and I read the number wrong. I had to get my glasses and double check. But it's correct, and it's actually a 120% increase from last year.
And then we got hit by Hurricane Debbie and Hurricane Helene and then Hurricane Milton. And after the reforms making it harder to sue insurance companies, Weiss Ratings found a sharp increase in damage claim denials compared to storms in prior years.
Some of the bigger providers in the state have denial rates close to 50%. So half of the claims are being denied.
Weiss Ratings shows 14 property insurers in Florida closed more than half of their claims in 2024 with no payments.
That the average number of claims closed without payment in Florida is substantially higher than the national average.
Well, in Washington, U.S. Republican Senator Josh Hawley flagged that rise in denial rates in calling for a congressional investigation. And the conservative Republican governor of Louisiana cited Florida's reforms as a model for what not to do.
They tried wholesale tort reform that the insurance company said would lower rates in Florida. And today, policyholders in Florida struggle to get the very claims paid on the policies that they paid for.
Well, coming up, we'll dig into the money. We'll show you how insurance companies told state lawmakers they were in financial distress while some paid their sister companies as those same sister companies scored billion-dollar profits. If you bought home insurance in Florida, you may not have been familiar with the company you bought it from. And that's because many of the large, established, nationally known brands scaled back or pulled out of Florida after a rash of hurricanes years ago, and smaller, lesser-known companies filled some of the void.
You may have a hedge fund that is anchored offshore. They may even be domestic, but they'll own a holding company. And the holding company now owns 7, 8, or 10 different companies. One of them is the insurance company.
And some of those insurance companies make money and then pay their sister companies, which may be a mix of administrators, adjusting firms, reinsurance firms, or restoration companies. So they move money from the insurance business, where there are caps on profits and strict regulations and risk of claims loss, to their sister companies where there are not.
And listen, it's all good as long as you're honoring your policies.
But in prior years, we've seen some insurance companies pay millions to their sister companies as those same insurance companies went broke while competition shrank and prices shot up. And state lawmakers did not know much about that when they made it harder to sue insurance companies and offered a fortune in state subsidies.
We've been trying to solve a problem without the actual data to support the information.
Before the reforms of 2022, state regulators examined 53 companies from 2017 to 2019. And if you remove the outliers, well, the companies did collectively lose $432 million, the insurance companies, but their affiliates made $1.8 billion. And if you count the outliers, well, the insurance companies did not lose money. They made $61 million, while the affiliates, get this, made $14 billion. But again, state lawmakers did not know about that when they passed the 2022 reforms, because the State Office of Insurance Regulation did not release those findings until well after the reforms passed. And as belated and revealing as that state report may now be, it just cracked open the door on the insurance companies' financial dealings. Because one, it cuts off at 2019, and two, it only tracked lateral payments to subsidiaries, not payments up the chain to the holding companies and to the owner groups.
Say after the OIR completed its study, the situation got worse and worse.
A more recent study by Weiss Ratings looked at 2023, and it found Florida insurers paid their affiliates $1.8 billion, plus another $335 million paid out in dividends to investors. And for perspective, Weiss found the affiliate payments were more than 20% of their total expenses and 4 times higher than companies in other states. And on the dividends, Weiss research also shows in 2021, companies paid out $295 million in dividends while reporting steep losses. And in 2022, another $213 million while reporting steep losses. And in 2023, another $335 million while turning a collective profit of $160 million.
The source of the insurance information that we have is the insurance companies themselves.
In 2023, the legislature drafted legislation to require insurers to disclose their financial stability and their profits and their payments to their sister and their parent companies, but then removed it. They said they were concerned about placing additional burdens on companies in financial distress. Well, coming up, we have insight from an insurance company insider, and she'll share tips on what to do if you have a legitimate claim that gets underpaid or denied. You may have talked at some point to Ann Peachy.
That's fine, yeah.
She's a licensed insurance adjuster who takes calls, assesses home damage, and figures out the cost of fixing it.
Send me an email, let me know, and then I'll forward it to him.
And she's been doing this for large insurance firms every day for the past 20 years.
There's a window that was destroyed by fire.
And she also has advice on what to do if an insurance company lowballs a damage estimate.
And you just can't be intimidated by these people on the desk or a supervisor.
She ought to know. In fact, she may be able to tell us more details about the damage in these photos than any other adjuster, because they're pictures of her own home.
So the fire started here, burnt. This was completely charred and fried.
After Hurricane Helene, a power surge torched her house. She pulled into her driveway, not knowing the flames were racing across her ceiling.
When I opened up the back door, you could not see through the house. It was full, ceiling to floor, black smoke.
Thankfully, she had ample coverage with full replacement cost and 2 decades of experience resolving this for others.
I measured the house, I photographed everything, just as if I was running a claim for someone else.
Then she got a deep dive education on what can go wrong for homeowners, starting with the delays.
I said, I haven't heard from the field adjuster, and then come to find out it was never assigned to a field adjuster.
Then the estimates that did not match with her receipts.
Off it comes back, it's still wrong.
The home measurements that did not add up.
I can see the measurements were all wrong.
One adjuster being replaced by another.
The first guy had a family emergency.
And then the runaround.
The room measurements are still off.
Her own receipts and confirmed measurements documented a total covered loss of $252,000. And then came the lowballed repair estimate. So they're coming in at $160,000.
Yeah, so a little short.
That's about $90,000 short.
Yeah.
She asked them to send her to a different department that handles larger claims, but that didn't work.
Well, they're not going to do that. I said, well, that's ridiculous. That's where I should be.
Which brings us to the same back and forth too many Bay Area families have been going through since Hurricanes Milton and Helene.
I was told, we're not paying you any more money. You got enough. I said, getting enough is not how a claim is handled. You have to pay the replacement cost value of the home. Oh, we're going to just not agree, and this is how it's going to go.
And that's how it went until Ann filed a complaint with the state, and a different supervisor with her insurance company called her to apologize. How long from the time you filed the complaint to when he called you back?
Oh, he called me that day.
So it seems to me the elixir for you is just getting that complaint filed.
Yep.
He told her he examined her photos, receipts, and measurements, acknowledged everything she had, and told her they should be able to get it resolved.
Never give up.
A lesson to any homeowner about the value of patience and persistence, and if all else fails, filing a state complaint.
I even told him, I said, I don't want to file a complaint. I just wanted to be transferred to large loss. He says, that's where you should have been.
You can file a complaint through Florida's Department of Financial Services website. Coming up, the problem that a lot of homeowners don't catch until it's too late, and the search for solutions in state government. Hurricane Milton ripped this house apart. A tree sliced through it.
It was horrific.
It blistered boards and spilled nails and insulation through the hallways, trapping Barbara Barth in her bedroom.
It was awful, I have to say. It was pretty bad.
And it's still bad because of what happened or what didn't happen next.
You know, and almost a year later, I'm still displaced from my house.
An engineer examined the damage and estimated it would cost up to $304,000 to repair. The good news is that she found a contractor who would do it for $289,000. But the bad news is that her policy maxed out at $241,000. After the cost of tree and debris removal, she's around $60,000 short.
You're out of pocket a lot of money.